And welcome to Financial Wellness Wednesday.
Start again, Nicole.
Hi, this is Nicole Siebert. I'm here with Dee Dee Brooks. Welcome. We're with Surf City Financial Group. And today with Financial Wellness Wednesday, we're going to review health insurance in 2021. We have kicked Brian out for today, and we are taking over. So hopefully we do justice. The first thing we're going to lead into is what we'll cover today.
And my slide is not moving forward. Let's see what's going on here.
So for today, what we're going to go over is what can be offered by employers. So as an employer, benefit packages range from medical insurance all the way to group disability. So we'll go through that. What benefits employees are looking for. Things have changed over the years. In the past, we've seen priority of medical insurance, but now we're seeing a lot of other things like FSA accounts, other additional benefits that employees are looking as part of their compensation package. We will review that. What are some simple things you can do today as an employer that doesn't necessarily mean adjusting your entire benefit package? The other thing we'll dive into is the American Rescue Plan Act, ARPA, that was just released a COBRA subsidy that'll go into effect. It has for April 1st. We'll review what we know and what we learned today. So as of yesterday, we had a different conversation. Today it's changed. So we're going to go through that. How can you request a health insurance quote and consultation from us at the end? We're going to review a lot. So if you have notes or you have questions, feel free to ask us. At the end, we'll give you a contact information and we'll be happy to review.
And if there's anything we don't speak about that you want us to cover, just let us know, because we like doing these. Okay. So as an employer, what can be offered? Medical insurance is, of course, the number one. About half of the companies in the United States offer medical insurance. Dental insurance is very popular. If you buy an individual dental policy, there's usually waiting periods and reasons that you can't use it right away. But with group dental, you know, it's usually a richer benefit. Vision, that's also a commonly offered benefit. It's not expensive. And with healthcare reform, children, their vision is covered under the medical, but with adults, it's anything over the age of 19, at least here in California.
Right.
And let me add that Nicole and I are actually working in different states. We've been doing this for decades, but we really are 50 countries. But it is, there's a lot of common themes with group health insurance.
Correct.
Group term life insurance. This is very commonly used. What do they say? About half of the companies offer it, and about 25% of the insurance in the United States is group term life, but it's not designed to be permanent. It's designed to help you during your working years.
Right. And then, it's a group benefit.
Yes, it is a group benefit. Tax treatments. You can only get a flexible benefit plan or a dependent care plan through work. And this is one of the few benefits that actually benefits the employer as well. One thing we know about group benefits is that employers often have an advantage in designing the benefits program to benefit themselves. So with healthcare reform, we were discouraged from doing management carve-outs, but there are still benefits like group long-term care or group disability, especially where the benefits can be skewed to benefit one or two people instead of having to offer it to everyone. It's not subject to the same disability rules.
Right.
And we do have companies where we do offer like a base plan for disability, but then we have a couple of executives or carve out where the benefits are very rich, will last up until retirement and are a fraction of the cost of an individual policy.
Yeah, there's a lot you can do, even as a smaller size company. So this isn't just speaking on large 100 plus, 50 plus. This is if you have 5, 10, 15 employees. I mean, this is benefit package that can be built out this way, even for a small company.
Yes. We like to take a look at people's offerings and then make comments on it. So, okay. When healthcare reform first happened, we heard that with all the expanded preventive and with everyone having it, that we would see some stabilization in the rates. And we are seeing trends. We thought that with COVID, it would be very, very expensive this year. And we're finding that we're getting basically flat renewals. I'm just now renewing a renewal in New Jersey for a group that we have there. And I'll have to report back to you because I haven't gotten into the nitty gritty there. But our California renewals, our own, went up $6.
Yeah, they sustained very well. And I think that, you know, we didn't know what this year was going to bring just because last year was so unpredictable. I mean, we're still in that state right now, but, you know, when the rates rolled in, we were kind of hesitant to look at, you know, what are we looking forward to the next quarter, the second quarter, third quarter. But, you know, the couple things that we've talked to people about a lot is, you know, well, I didn't use my health insurance last year. You know, I didn't go to the doctor, which a lot of people didn't. And you're lucky if you weren't one of those people that went in and had to access health insurance or were sick or, you know, with COVID, it was urgent care facilities were still being used. You know, virtual visits, that's a new thing for us and that's going to continue. That's not going to stop. So, you know, virtual visits were still being accessed. I think I was reading the article the other day that one of the insurance companies had put out that within 1 hour, they had over 10,000 calls virtually for doctors' visits. So these are individuals that aren't going into the doctor's office, but they're virtual visits that these are going to continue. So we'll still see these on, you know, your benefit structures.
And mental health.
Mental health, yeah, that expanded and that's still expanding.
Mm-hmm. It sure is.
Yeah.
Which?
Yeah. So what type of benefits are employees looking for? So in the past, we've always, when we talk to individuals, they'd always say it's nice to have. You know, they really look at their compensation and think, well, benefits are a nice thing to have. Now it's a must-have. So when you're hiring, retention, recruiting, employees are viewing benefits, especially medical, as a key part of their compensation. So they're looking at these packages and thinking, okay, well, I know what it is to get insurance on my own. So let's see what this company has to offer me. What plays into that too are the medical. The mental health benefits are now expanding. Mental Health Parity Act was established back in, I believe, 1996. And every couple years we see an expansion, addition added to it. Now what we're seeing is that Department of Labor and the Health and Human Services have required the insurance companies to now come out with what's called a comparison report. There's a huge long name to it, but I just call it comparison report to be easy. But they basically take a look at the current medical surgical benefits on the medical side, and they want to see a comparison on the mental health side that it is comparable, if not as good, but better. So that just shows you that, you know, the insurance companies are listening. They know that mental health benefits are a huge deal, and they're trying to expand on that and make it better. You know, going back to what employees are looking for, I think as an employer, there's one other option you can look at, whether a small or large company, was the employee assistance program. Larger size companies, we're talking 100 plus. This is something that's not really new for them. They have a lot of these employee assistance programs built into their benefit package. Some small size companies, if you already have dental, vision, life, they already add it as an additional benefit that's at no cost. These employee assistance programs are good to have because it's another source for the employees to get help that, you know, we all know that we have this work home life, you know, and I think last year kind of showed how they kind of intertwine, and very easily they can intertwine. So they need that outsource of individuals. They can seek, you know, counseling, referrals for personal work-related issues, stress, financial issues, legal issues. We even have some employee assistance programs that offer trust. They can help you build a trust. You know, they have attorneys on staff that can do that. So I think something as small as that is, you know, something great for the employees to have. Yeah.
One other thing is when you offer group medical, you're offering your people the opportunity to pay for their share of costs with pre-tax dollars. If somebody goes onto the exchange and even if they're getting a nice subsidy, the check, if they're a W-2 employee, there's no place on their tax return where they can write off their health insurance. So even with the best subsidy, sometimes it's better to have group medical. Right.
That's very true. And it's, you know, going into, again, back to what employers now can do, something in action that we were talking about that can be done now, anytime. I mean, it doesn't have to be at renewal. It doesn't have to be at the employee review. A lot of companies do it at the review. And it doesn't have to be January 1st. You know, you could do this really anytime, something very simple to put together, and it helps on the employer end and the employee as well. But these compensation statements, a lot of larger size companies have been doing this for many years. This has trickled down to the smaller size companies now we're seeing where they basically format, it's a little one-page statement that says, here's your pay time off, your sick pay, basically calculating it for the prior year, what your benefits were, what the employer paid on 401k, medical, dental, vision. And it shows basically your compensation package so the employees can actually see, because Dee Dee, you and I both know we've had these conversations over and over when somebody has departed from their employer and they get that COBRA notice and they say, wow, this premium is really high.
Yes.
Like I was paying $100 a month pre-tax. Now I'm expected to pay $800 for my health insurance. And yeah, it is a step back and it's a surprise. So I think it's not only good for the employer, but it's good for the employee as well to see that.
Indeed. We have a group that we've had on the books since 1994, before healthcare reform in California, AB 1672. Right. We actually had to get physicals for the employees before we can get them covered. And he's in an industry that doesn't typically offer benefits. And often an employer will ask us, what should we pay? And sometimes we look at the industry, because some industries it's very common to pay more. And some
right.
industries it's not even common to have health insurance. And in his world, he has pretty much the same employees. He has next to no turnover. And it doesn't cost him a lot to have his benefits program, but his employees right. value it. And he has done this to show exactly why they should work for him instead of the larger guy.
Absolutely. Yeah. Retention's, that's a good tell as far as benefits go, is retention on there. So,
yeah. And the money that you get towards health insurance from your employer is not taxable income.
Right. So and that's great. That is definitely. So speaking of the compensation statement, we had gone into a little bit about, showing that to an employee and as far as knowing the cost and stuff. And now we're kind of shedding the light on that with this new COBRA subsidy that just came out. So recently, ARPA, or the American.
Uh-oh. Come on, computer.
A subsidy. So a lot of moving parts. We're going to try to just narrow it down a little bit here for you. So beginning April 1st, 2021. Yes, this is now already in effect. For the next 6 months, it ends September 30th, 2021. Anybody who has lost their job going back to November 1st of 2019, and they lost their job involuntarily. This is not somebody who has chosen voluntarily to quit their job, but they have lost it. It doesn't have to be due to COVID. Now has a subsidy that will kick in April 1st. And if you are eligible through your 18 months for the next 6 months, the insurance company or your employer will provide the cost of that COBRA over the next 6 month span. So COBRA in itself is already a very confusing thing to explain. It changes periodically. But what will end up happening, and as an employer, there is a sense of responsibility there. But if you have a third-party administrator, if you're federal and have over 20 employees, you have somebody that is administrating that for you. You might be in-housing it. There's a lot of companies that do that. They in-house their COBRA still. They send out their COBRA notices, and they manage that, which is great if it works for you. But know that another notice is going to be required to go out to these individuals. So what employers are doing now is they're taking a look at, since November 1st of 2019 until current date, who are these employees who have lost their coverage, and it doesn't have to be due to COVID, and a new notice is going to be generated out to these individuals to say, hey, effective April 1st through September 30th, if your 18-month window is between that time, your COBRA is going to be covered for you. So when Dee Dee and I spoke yesterday, we went over all this information, and as of yesterday, the Department of Labor had not even released that model notice. 30 minutes before this, I went onto the Department of Labor website, and there it is. That tells you, yes, so that tells you how quickly things are changing. The model notice right now is about 12 pages long. You can obviously condense it down. There's a lot of things in there you don't need, but if you are one of those employers that has over 20 employees, this is something you have to pay attention to, something that you definitely need to take action on, whether it's your administrator or you internally. Those notices have to be out to these qualified individuals by May 31st. That's the deadline date to let them know that they qualify. So who sends these notices and who pays? Those are the questions. What do I need to do? Like, what am I responsible for? So the who pays part. If you're a multi-employer plan, multiple companies, the plan, the carrier, they're going to be responsible for basically the payment of the COBRA. They're going to subsidize that. And then if you're a fully insured plan, an employer, most companies are, and you have over 20 employees, the employer is going to be responsible for that. And basically, self-funded employer. Mini COBRA, which a lot of people know in California as cow COBRA or church plan, the carriers are going to be responsible. So if you have less than 20 employees in California, you're considered a cow COBRA group. The insurance company is going to take on that administrative, leg of that. They're going to take on the payments of that. And then the next thing goes, okay, well, if I'm an employer and I'm now sponsoring this, how do I get paid back? Where is this going to come back? Do I pay this? Nothing happens. It's a tax credit. So the person who paid the premium is entitled to a tax credit against their quarterly Medicare taxes. So if that amount you've paid towards COBRA exceeds the tax credit, so you basically have a balance, you're going to get that back in a refund. So it's not going to keep rolling. So a lot of people say, okay, now I got this credit sitting on my account. No, they're going to basically take what it is and then the refund will be given to you. Department of Labor and IRS are still piecing it together. So you know how that works. They put out these new legislation, these new laws, and then they say, okay, now let's figure out how it's going to work. So everybody's just kind of on the edge of their seat, waiting to figure out exactly how we do this. So what we do know is that as far as being eligible for it, for the subsidy from April 1st to September 30th, you cannot have other group insurance available to you. So this is somebody who is out of work now, maybe has individual health insurance, maybe you have a subsidy through, Covered California or federal subsidy. So these individuals would qualify for that 6 months of coverage. Now, the point of this, a lot of people say, okay, well, that's great for April 1st, but I terminated, back in December. So I've had individual all the way up to this point. The good part about this is that your COBRA eligible dates, the 18 months, doesn't change. So if you termed into you're going to basically be able to choose, okay, well, I'm going to start 4/1 on my COBRA. Your 18 months is still in that window time, so you're fine. I'm going to take 6 months of that, that's subsidized, and then effective October 1st, that's when the rate's going to go back to you paying your COBRA. So there will be another notice sent to you saying, we know it's been covered at 100%, but now it's time, 10/1 that you're going to start paying. And you're going to have the opportunity to say, I don't want it. I'm going to go back to the individual route because, now it's not being subsidized. So that part's a little tough to kind of explain. There's going to be like that 18-month window where we're going to have to factor to make sure. But going back to November 1st of 2019, that's the date because they had technically have 1 month of subsidy in the month of April. The subsidy does include the 2% administration charge. So a lot of people have asked, well, do I have to pay that? No, that 2% is included in the subsidy.
But there is a responsibility on the part of the ex-employee as well.
Correct.
And there's a fine if they fail to notify you that they went on to other group insurance or if they went on to Medicare.
Right.
So ex-employees also have a responsibility in this.
Right. Yeah, absolutely. Yeah. So it's great. We saw this back in, was 2009, Dee Dee, I think it was ARA, and it was, very different, but it was the same thing. It subsidized the COBRA plan. So if you're one of those individuals, ex-employee, if you're an employer and you're thinking to yourself, what do I need to do? I have no idea how this operates. That's good. We can help you with that. We can navigate. Things are, again, changing. So we can help you with the notices.
Mm-hmm.
So let us know.
Well, we covered some subjects here. Boy, we can speak about this all day and all night. Thank you.
Yeah.
If there's something that we didn't cover that you want us to discuss, let us know. If there's anything that you have going on and you want to get another opinion, give us a call. You know how to reach us, 714-377-1400, or just ask us for a quote via email. And
absolutely.
Yes. And
be happy to help.
Thank you very much for tuning in today.
Yes, thanks everyone. Have a great day.
Have a great day.